Hello again and welcome to video 5, module 2, how to do the top-down approach and how to draw trend lines. Of course, we could spend a lot of time with the top-down approach and how to draw trend lines, and of course I will upload more videos on other modules later on this topic, because that is really one of the most important parts when it comes to the technical analysis. We need to be good at that, right? As a trader, you need to know how to do the top-down approach correctly and how and where to draw your trend lines. But for right now, to understand the basics of the system, I will just use one pair, one example, and that will be enough for now. So how do you do a top-down approach? I have all the steps here ready for you. First of all, start your chart analysis on high time frames to look for the main direction, monthly and weekly chart. That means we start with a monthly chart and then we switch to the weekly chart. Okay, for that. Step 2, from there you go down to the lower time frames to identify the market behavior, weekly and daily charts. So I use the weekly and daily charts to do so, and I will show you how we do it exactly afterwards. You need to check if the market is trending or ranging. Yeah, very important to know if the price has a clear direction or if it's ranging between two levels. Now, point 3, after identifying the market behavior, you have to switch even to a lower time frame in order to look for trading setups. I use the daily, 4-hourly and 1-hourly chart for swing trading, and the 4-hourly and 1-hourly chart combination with a 5-minute chart, of course, in order to look for day trading setups. Point 4, if a setup is complete according to your trading rules and your trading plan, of course, you need to take action, which means you place a trade, and the most important part, afterwards you manage the trade. Okay, in this video we won't do it all, we just do the top-down approach and the trend lines, but all in all that's it. Okay, and in the upcoming videos you will get all the steps. Okay, let's start with the USD monthly chart. I take this chart as an example because it's easy and it's very trendy right now here. So look at that, that is a monthly chart. You don't need to spend a lot of time on the monthly chart, you just need to know the direction of this pair. In this example, you see the price moves down, it's under the 36 EMA, it's under the 200 EMA, and under the 633 EMA. Remember your Spartan FX template, the golden EMA is the 633, the white the 200, and your guide the 36 EMA, the red one here. Okay, so you see a crossover of the 12 and the 36, so the 12 is crossing the 36 to the downside. The price stays under the 12 EMA and under the 36. This is telling us that we have a strong downtrend here where you see my mouse. Then here the price creates a small higher low, that means the price moves up, it retraces back, and the price creates a higher low, a higher point here on the chart after a bigger retracement. Here we go, that low, that retracement here is higher than the lowest point on the chart. And then you see the price breaks the 36 EMA, your guide, 1, 2, 3, 4, 5, 6, 7, 8 more, and even more green candles on the monthly chart. 1, 2, 3, 4, 5, 6 already broke the 36 EMA, and it's always moving higher. You see even the 12 has crossed the 36 up, and that is enough information for you to understand the direction of this pair right now, right? So is it a downtrend here or an uptrend? Of course it's an uptrend. The price crossed the 36, and on higher time frames you don't even need to draw trend lines, you just see it. Each candle here is 1 month, right? Sorry, it's a monthly chart, not a weekly. So each candle 1 month, and for 1, 2, 3, 4, 5, 6 months this pair is moving up. That means a very powerful uptrend right now. Also, as I said, the 36 EMA, your guide, has broken. Before that, of course, the 12, that's the first alert, and then the 36. So a clear uptrend right now. You can now also start drawing your first lines, trend lines. You don't need to do it on the monthly chart, but you can do it if it makes sense. That means if you have enough touches, you can connect on a chart. So first thing you want to do, now that you know that this is an uptrend, many green candles, and the 36 EMA is broken, you take a horizontal line up here where you can see the box, the small box here. When you hover over it with your mouse, you just click once, and there is your horizontal line. Of course, remember, you can change these lines by double click or right click on it afterwards, and then you can change the color or whatever you want to change here. I leave it as it is. I like it. It's aqua, it's light blue. Good enough. Now where to put this horizontal line? First, you need to know the most important part here is, what is the price doing right now? Where is the price? Remember, the price is the most important indicator you need, because price is telling you the truth. Everything else is usually late, but at least gives you a good look on the chart. So there we go. That is the price up here where you have this small thin horizontal line. In order to draw a horizontal trend line correctly, to make it really interesting to you, you need to find previous touches on the chart. That means you need to see the price bouncing in an area a couple of times. I usually suggest at least 2 or 3 times. The more the better. In this case, if I try to find resistance, that means price is going up, so where is my next resistance? Where is the price likely to bounce? You know, or where would we probably see a reaction? Okay, look back, you will see something is pointing out here. You have a tail down here, some peaks here, and right now the price is here. So if I just take this horizontal line and check out where on my chart is the previous high close to the price, that would be that point here right now, right? This green candle here and the highest point. If I look back, I also see that is 2005 at the same price, a red candle. Okay, so the price went down, it stopped there, it moved higher. So this and this is at the same price. If I take my horizontal line and put it to this level, usually we don't put trend lines or horizontal lines exactly at peaks and points, but on the monthly chart you don't have that much history. You can see it's fading here. So if I have 2 peaks clearly pointing out somewhere and I connect I can connect them and they are close to my actual price, that would make this horizontal line powerful. Okay, the price bounced once in this area, went up, came down, it spiked here, of course, a big spike down, but then it went back up, came down, and then here again on that retracement on the downtrend, it stopped again at the same price, and then of course it went down for another 3 years, and now it went up, and I see that the price is really close to that area where the price already bounced 2 times, and that means for me that it could be that the price bounces again. So if the price moves up here, it could be that it's bouncing a little bit, maybe a lot, maybe not, but very important for me to know. Okay, that's the first line you want to draw after identifying the direction. And then you want to draw, sorry for that, there we go, you want to draw another line under your price to find the next major support area. Now you don't, on this monthly chart, of course, if here's your price, you go down, you see you have some touches in this area. It would be best if you draw these lines on your weekly charts and daily charts. Okay, you will see it, you will see the whole movements just more clearly. So let me delete that. And as I said already, after identifying now the direction, and you have also found yourself a major resistance area, remember even the 200 EMA and the 633 are resistance, but in combination with price touching at support and resistance, that makes it really important. Now that is the first thing you want to do in the monthly, as I already said. Next step would be the weekly chart. So from the monthly chart you switch down to your weekly chart. Now if, let me delete the previous lines here, you can squeeze it a little bit so you can zoom out and look at that. Remember our resistance coming from the monthly. On the weekly it looks even better. Now you want to find yourself support, horizontal support. You take your horizontal line, this is where the price is right now, and if you look back, where do you have the most touches? Here's your line, take it as a little bit help. Right now, if you see where the price is right now, you have a lot of touches there, right? So actually the price is at major resistance right now. You also have your 633 up here, really close, not exactly by the pip. The markets don't work like that, but it's close, and that is good information for you. Now you don't want to draw a line exactly where you are right now. It wouldn't mean much. You know that you have resistance close by. You want to find the next level under the price, where the price is right now. So I go a little bit further down, another touch here, that's about the same, so it doesn't mean much. Here again, really close to the price, something that is not that close. If I take that line now and go a little bit further down, you'll see I have this low from 2008. You can also scroll a little bit back. You don't have to, but you can. You see there's nothing else right now. And a little bit lower, I have a lot of touches here. As you can see, 1, 2, 3 touches. This one here, also previous support again here, a little one here, and of course the spikes up here, and even that one, it's not exactly touching, but it more or less counts. So between these previous lows and these peaks here, in between where we have the most touches, that's where you want to leave your line. And if I zoom in a little bit, you see it makes sense. A touch there, some touches here pointing out here, many touches there, and even here the price bounced. You see that almost 300 pips moved down and then moved up again down. So I think that's a really good area. Look at that, many touches here and here and here and here, pointing out kind of a range here. So now you have a major horizontal horizontal support and resistance line, and the price is in between. So you have about 250 pips to the next major resistance level, and about 400 to the next major support. Okay, now the last thing you want to do is drawing lines all over the place. Now you could say, okay, great, I also have touches here, and I have touches there and touches here and there. Okay, great, yes, of course, but you will never find any setups if you just connect every touch you find. Yeah, you need to figure out what is important, where does the price bounce many times, and that's where you draw your lines. And as I said before, not exactly on the peak or the body, just in between. So you have points here, you also have points down here, and if you leave it just there, you have more touches and a very strong horizontal support area in this case. Yeah, we will, as I said, do that many times in other videos later on, but for this example it's enough. You don't have to draw any other lines if it doesn't make any sense, and I'm talking about support and resistance trend lines now. You see the price moves up and up and up and up and up, and as I said, on the monthly chart it broke the 36 EMA, and with no bigger retracement it just moved up. So if you take a close look now here on the weekly chart, you see again the price creates lows, and you have a lot of touches down here. So that is a really strong support area. You can leave the horizontal line also down here, but it wouldn't make much sense right now because the price is over 2,000 pips away. So having a line here, okay, great, but you don't have to. I'm just explaining how powerful this area was. Afterwards you got another one down here. So previous support and resistance, again here changing to support, your higher lows, and then you see a crossover to the upside. So the 12 is crossing the 36 up, and it's really moving with no bigger retracements. Let me delete these lines, I don't want to confuse you. What you want to do now is draw your trend line, the first trend line, to see that clear break. You don't really have to, because when you see the 12 crossing the 36 to the upside, the price moves up, you know that you will probably see a new trend, only if, of course, if the market is ranging, then it would change. But right now a crossover and then so many green candles means that a trend is going to change probably. Take your trend line from up here, this box, click on it, left click, and then connect at least 2 or 3 touches, 2 or 3 peaks and retracements to define a powerful trend line. So that is a high point here. Even if I go back, you will see many points, retracements here. Okay, if I connect that high, that high and this high after a bigger move, and I extend the line. Now I have my 3 touches here, and I extend the line again. Let me now also zoom out. What do you see? 1, 2, 3, 4 touches, and then your higher low on that higher time frame. The price breaks the trend line, and that tells us again that we will probably here, after the trend line break, price being over the 36, we see a new trend. Okay, that's the way. The second thing you want to do after drawing your horizontal lines, you want to draw a trend line to see the clear trend change. Crossover, 3 touches at least, so you need to see the price moving down in this case because it's a downtrend, retracing, creating lower lows and lower highs. So this is a lower low, lower high, lower low, lower high, lower low, and then you see the first higher high here and higher low, and then the price bounces again in this area, creates new lows, new lower highs and lower lows, and again here it's trying to cross over to the upside. It's bouncing again. Now you have a lot of history here, right? Remember, we don't need to draw a line exactly at the peaks. We don't start a trend line on a peak or in the middle of the body, but something in between, and that is enough. At that point you have here only 2 touches, but if you extend the line, it ends up here, and you see the price retraced at that point 800 pips, and because of that, the extension of these 2 to 3 touches here made it very powerful. The bounce, the price bounced here in this area again, it moved lower, so that's a very powerful line. If you can connect 3 touches, that is my favorite, at least 3 touches, then you have a very powerful trend line. The higher the time frame, the more powerful the trend line. Okay, also as I said, higher lows and higher highs here, higher lows in this case, and then the price moves up. That's the first line. You don't need to draw other lines on this weekly chart. Horizontal lines, 1 trend line, so you see the clear trend change, and you could draw a support line, but it doesn't make sense on the weekly chart. To see it nicer and clean and clear, you want to switch now from your weekly chart to your daily chart. There we go. Here's your trend line. You see the price on the daily chart. I will zoom it in a little bit. 1, 2, 3s, higher highs, higher lows. The price, you see a crossover of the 12 and the 36. The price moves higher, retraces back to the 36 and the 200, and then it bounces again after touching that powerful trend line coming from the weekly chart. The price retraces over 120 pips, then it breaks up with a lot of power, breaks the resistance line, the 633, so the price is not squeezed in between the 200 and 633 anymore, and then it moves up and up and up and up, bouncing on the 12, on the 36, and every time it's touching the 12 or the 36 is bouncing, and that indicates a very strong trend. Okay, easy to spot. Now what you want to do here, take a look at the price. Where is the price right now? It's up here. So finding support lines down here wouldn't mean much. What you need to do now is to find a powerful support line and resistance line closer to the price. What do we need? 3 touches. 1, 2, 3, 4, 5. Try to draw trend lines close to the 36 EMA or the 12 EMA. That means always close to the price. In this case, 1, 2, 3. You see, if I just connect these 3 little lines and then extend it, it's ending up there. You extend it, it's ending up here. You see how powerful the 36 EMA is in a trend. It's guiding you. Yeah? Now you have a very powerful line here. The price is not that close, but this will be very important in case the price bounces or comes back. Yeah, not for this video, but later on you will understand. This is your support line there. Now what about a resistance line? Yeah, if the price is an uptrend, you want to draw support lines. You want to see what happens to the price after the retracement, where you expect bounces. These are the areas after these bounces where you want to look for setups to trade, right? That's why you do the top-down approach, and that's why you do that on higher time frames. And I said it a million times, but you have a huge advantage over most traders because nobody is doing that, or not many people are using weekly and daily charts for the top-down approach to see what's really going on in the markets. And you can only see the clear and clean direction if you work on weekly and daily charts and 4-hourly charts before you look for good setups. Okay, now 1, 2, 3, 4, 5 touches. That's it. Now a closer line to the 36 would be if you just take another trend line from your previous low. Remember, it's an uptrend, you're looking for support, and then connect it with the previous retracement. These are only 2 touches. What you can do is you can zoom out and try to see if you can find something to connect with these 2 touches. Is there anything? No, not really, right? What you could do is connect this line and extend it, and you'll see price already bounced on the 36. So it doesn't mean much because the 36 is your guide anyway. So what you do, you just leave it where it was before. You see, if you draw it from here or here, it doesn't matter much. It ends up at the same place. Make your chart bigger. Now that is support, and that is the next support line closer to the 36. And the 36 is your guide anyway, so you don't really need it, but just leave it there to practice. What about resistance? You have horizontal resistance already there. So would it make sense to draw another line? Why not? In this case, yes, because you have multiple touches right here, 99 at the 99.80 level. So to get a closer look, what do? You have your horizontal lines, you have your trend lines, your support lines. Let's check the 4-hourly chart. So from the monthly to the weekly to the daily, now to the 4-hourly chart. And on the 4-hourly chart, you see all the touches. You can draw a line from the highest point, connect all that, and then you have a powerful trend line really in this area. Remember, it's never exactly by the pip, it's a whole area. So in case you don't like that one line because you know the price will not stop exactly the line by the pip, you can draw two lines. You can do it like this, and you draw another line between here, so it gives you a buffer that will give you your resistance area. You can do the same with your support line. Okay, for me that is very, not only for me, also for you, of course, very important information, because the price right now is really close to 1, 2, 3, 4 touches, and the price even on the higher time frames couldn't break this area for 1, 2, 3 times. And right now there's still pressure because the price is still creating higher lows, but it's not creating higher highs, so the price did never really break this area. And what does it really mean? It means that you are not looking for setups right now. The price is just too close. What you really need to do is you need to wait for clear break of this area if you're not already in a trade before you look for new setups. That's not for this video, but of course you need to think about these things when you do your top-down approach. Okay? Very important information. What you need to see is a clear bounce of your trend line, the 200 EMA in this case. You see many touches here. Support line, that means the price has to come back first, or you need to see a clear break of this area before you look for new setups. Yeah, that is what you do in the 4-hourly chart. So the next step is, you don't need the next step right now on this example, but we do it anyway. You know that you have a lot of resistance there. Sometimes it's not easy to see, but here it is. So in case let's just ignore all that, you would switch now from your 4-hourly chart to your 1-hourly chart. That's just the step, and you would look for support and resistance. And as I said, you don't have to, because you know where your support and resistance is. If you find 3 touches, you can connect them. We have only 2. The 36 EMA is close by. You don't need to draw that line right now at all. Here is your resistance. So if you were to look for setup, you would now take a 4-hourly chart or your 1-hourly chart, and if there is a setup, we haven't covered the setups yet, you would look for an entry, and for swing trading, of course, for daily, 4-hourly and 1-hourly charts, that's where we look for entries there. For intraday traders, you would combine the 4-hourly and 1-hourly chart, and then switch to a 5-minute chart to look for an entry. Okay, but I will explain that in the next videos in much detail. For right now, it was the top-down approach, starting from the monthly, drawing your horizontal support and resistance levels, looking for the main trend, then switching to the weekly chart, draw another resistance line or support if necessary. If not, then you switch to your daily chart. You do it there because you get a much nicer picture. You look for trend lines, support lines here as well, and for new setups, and not only for setups but also for support and resistance areas, to take profits or to look for new entries, and from the daily chart to the 4-hourly chart, drawing again your support and resistance lines. So that is something you have to do even if you are in a trade or if you're looking for a new setup. Even if you don't know yet how to look for new setups, it doesn't matter. You need to do the top-down approach, draw the lines first. Okay, that's it. And as I said, I will do more videos on this topic, but for right now it's enough, and I'll see you in the next video. Number 6, the Spartan trading setup rules. How to do the top-down approach was video 5, and how to draw the trend lines. And now that you know how that works, the basics, we can go to the Spartan trading setup rules to find ourselves a trading setup. Okay, I see you in video 6. Have fun. Bye for now.